We're alive now.
Let's go.
Hello, gents. So yeah, you both have to listen to the latest Rogan episode, because on the latest Rogan episode, they talk how this table isn't real, that you're an avatar. So here it is. Like, it's basically, this physicist has concluded that we are in a simulation, and that you're an avatar, and your consciousness is like receiving a stream of data that's operating your body, which is the avatar in the game.
Tom's been going around the office today telling us we're all not real.
Yeah. And knocking on a table. Not real.
Well, if you study physics a little bit, you understand that physicists will agree that the better they get at looking at smaller things, they realize that, oh my gosh, there's nothing there. So that the math that we have in I guess the reality is more like this. I heard one physicist explain it like this. Reality is like looking at the LED screen of your laptop, show your laptop screen, and analyzing that screen to try to figure out what's real. But it's the microprocessor and the RAM of the laptop that are producing the image on the screen. But
Sure, the image is just an abstract.
Yeah, you're analyzing the screen, but that screen is being produced by something else. And currently in physics, it's like we've gotten to the point to understand that the screen that we're analyzing, so this reality, isn't what's producing what we are seeing. There is something else. So it's kind of interesting.
Yeah, that still seems crazy to me. I got to listen to that.
Yeah.
What is the something else? Like,
I think
you mean just when you look at it under a microscope, it's just like a collection of atoms?
No, I think the way he's describing it is that the something else is consciousness is a form of intelligence. There's a greater consciousness. We're chunks of broken, independent, free will pieces of consciousness operating our bodies, these avatars, and we're all connected in some way. But where that consciousness resides and what that's all about, I haven't got there yet. I'll have to fill you in.
So it's just our individual perception of the consciousness is what we're processing.
I think what we're processing is a visual representation created by something that we don't know.
Mm.
It would be like if you are, I guess the way he's describing it is that if you're a player in a game that you're playing and you're hitting the table and you're looking at the sky in that game, you think it's all real. You don't realize that we're on the outside with controllers controlling that avatar. You think the player of the game, the table in the game is real. You are real. It's all real. But if you look into that table in the game as the avatar in the game, you realize, oh my gosh, it's just ones and zeros. It's just computer programming here. This table is nothing but computer programming. Mm. But the avatar inside the game doesn't know we're outside the game, controlling the game and feeding information.
So we're saying when you look into things in the universe, it's created in such a structure. Like that there was an outside creator that created this reality that we're in. Yes.
It's referred to as whatever you want. Consciousness, higher intelligence, God. Everyone's going to have a different way to refer to it. And I don't know where that resides. Like, I don't know.
This is a crazy rabbit hole to go down.
Yeah. But there's
a good argument for God or some sort of creator.
Sure. Yeah. And then how do you define God?
Because you can scientifically prove that we are in some sort of construct that we're living in.
Well, I don't know if they can scientifically prove that, but they can our science and math can take us to the point that we understand that we can't go deeper. That when they get to like quarks or whatever it is, that we can't see anything. Like it's like energy. It's not an actual physical piece of matter at that level. So yeah, like we just don't have the constructs to understand what we're looking at.
Yeah, or the technology.
Yeah. But it leads to the idea that we are in some sort of, I don't know if you want to call it simulation or some sort of dream or some sort
consciousness side quest.
Yeah. Yeah.
It's kind of like taking the Bitcoin orange pill and you realize the world is not what you thought it was.
Yeah. Yeah. I didn't realize we were going to talk about this either. So.
This is the first Rockstar Live. I don't know if we mentioned that. We'll see. I'm trying to see if anyone's on here right now.
And we're going to release this as a podcast episode at some point, right?
I think so. That's the plan.
Okay, you guys wanted to. We don't have to talk about consciousness anymore. You guys, there was a few things we wanted to talk about. But consciousness. I mean, once you go down this rabbit hole, Anthony, what else is there? Take your whole life trying to figure.
I'm not ready.
We have to go back to school and become physicists. I guess I'm here to tell you guys we have to go back to school and become physicists. All of us.
What's the name of the?
We have to.
What's the name?
Stop talking about this real estate stuff. Okay.
What's the name of that Rogan podcast or the doctor?
Let me get it. It's so good. But there's a book called The Holographic Universe. That's an old book, maybe 20 years old. That is a really good book on this subject as well. There's a bunch of books. But this episode is, hold on. Here it is. It's the latest one, I think, right now. Thomas Campbell. Yeah.
All right, I'll give it a listen. We'll get back to it.
I mean, if it's not your cup of tea, you're not going to like it. But I don't know. I'm kind of fascinated by it.
Yeah.
What are we? What are we doing? How are choices made? What's free will about? How are we all connected? And then he talks about intuition and how saying intuition is a different type of data stream, that like we are in a society that rewards logic and intellectual analysis, so that like we appreciate math and science and all these things, but we don't really value intuition. Different cultures over the years have valued intuition at a much higher level than we would in like the West, let's call it.
Sure.
But we don't currently, but we've all had those intuitive feelings, some more than others. I always tell Nick, I always feel like I go off my intuition when you meet someone, you get a good feeling or a bad feeling. And what Thomas Campbell is saying is that feeling you're getting is part of some information stream that isn't logic or science. You know, it's something else.
You're going to have to get someone on the podcast to talk about
And
this.
we have to. We need a neuroscientist and we need a physicist to talk about consciousness.
And Michael Saylor.
Well, yeah. Well, we know the answer is Bitcoin.
That's a given. We got to get Saylor.
But did you want to put what did you have? Do you want to talk about?
Yeah, we can put up some recent headlines.
We have no format with this Rockstar Lab. We just hit record and started going. We'll see where this takes us.
Yeah.
So we got the first headline here. Canada's inflation rate fell to 1.8% in December, with prices declining during the GST break.
I saw this headline. It was they were saying it looks like whatever in the basket of goods for foods they were looking at, the prices of those came down because the taxes were gone for whatever it was, December, January.
Oh, got it.
Yeah, like Trudeau was taking credit for inflation coming down because of the GST tax holiday.
Got it. So now inflation looks good, but part of the reason it looks good is because there was no tax, so things were a little cheaper
until February, and then taxes come right back.
And this number will go up, and then they'll cut rates more, and then there's more inflation.
What a circle jerk of mess.
I don't know. I just thought that one was funny. You could skip that one. I just saw that and was just laughing when I saw it was just because of the taxes that are coming back.
This number, 1.8%, how is it calculated? Like, I know it's looking at like annual inflation, but you know how it's like on a month-to-month basis, it's like, oh, inflation came in this month at 1.8. Next month, it's 2.5. Like what actual measurement is being taken there? Like,
I guess we'd have to read that article, see how it's reported. Is it a month-over-month reading, or is it from last year, December to this December? I guess they would just describe it in the article.
Yeah.
I think everyone.
And then I guess with the Bank of Canada's next rate cuts later this month.
But sorry, just before we go to that on the inflation rate, that something to keep in mind is that we use a substitution model, or most central banks are using a substitution model now. So they can just jimmy up the number to read however they want. Because if inflation is too high and they're like, oh shit, I really wish it was a little lower, so we had like the cover to cut rates, they can just replace steaks with hot dogs.
Totally. They can change the basket to make it fit their own narrative.
Yeah, exactly. So when you read that data, it's like such a pile of shit. Like it doesn't even, and we're all kind of looking at that data to decide whether rates are going to be cut. Like it's such a fiasco of nonsense. Like we're literally in economic clown world.
Totally. I think most people now, especially listeners of this show, get that like better way to look at inflation is monetary expansion rather than those CPI headlines.
Yeah, totally. What's the next one?
What are your thoughts on Carney? Trudeau's environment minister endorses Carney, vows to work with him on carbon tax replacement.
Yeah. So Mark Carney, and I don't know if you remember, I guess, Aiden, you would be young at this point. And Anthony, I don't know if you know this, but Mark Carney was the central Bank of Canada governor here in the Bank of Canada, kind of the great financial crisis era. So to me, this guy's horrible. We don't want a central banker running the freaking country. And then he left to become the Bank of England central bank governor, or whatever the head of their central bank is. And now he's coming back pretending that he's going to like take care of Canada. I mean, I would say the last thing we want is a central banker running the freaking country.
Agreed.
Especially a central banker with this guy's track. Everybody complains. What are you showing?
That's his signature on the $20 Canadian bill.
No, it's not.
Yeah, Mark Carney. Look.
Come on. What a joke.
It's
That's
like
funny.
as establishment as it gets. His name
Totally.
And he's coming in as an outsider.
And it's funny, he's been doing the rounds in all the media the last couple of weeks. He speaks well, which is like, scary because some people will fall for what he's saying.
And I think he speaks really well. I think you're right. If he speaks as well as he does and cuts a few checks and sends out some money to a few people, he's definitely going to get some.
And they've been pushing like his narrative hard because he's really done the rounds the last like just 2 weeks. I feel like I've seen him everywhere.
And think about this. This is the guy, you know how all of Canada is complaining that real estate is too high right now, whether you're an adult or a millennial or a Gen Z. And by the way, the oldest millennial is 42, Anthony. You should know that. Millennials are pretty much going to be 50 soon, just for the record. Listen, but everyone's complaining real estate prices are too high. So now Mark Carney's arriving at the scene saying he's going to save Canada, but he was in charge of the Bank of Canada during the era that real estate prices rose faster than ever.
Yeah, he fueled one of the worst housing crises in the entire world.
He is part of the problem. Now he's coming back to saying he's going to save us from the problem that he created.
Mm-hmm.
And knowing mathematically that he can't save us because the debt-based money needs more debt. It's just a mess.
Totally. I think most people though, my age, and we'll see what happens. Hopefully, at least my age and my friends, I think the Liberal Party just has in this election. I think they have no hope. I hope so. We'll see what happens, but I think the ship's it's too far gone. They're sinking, and I think it'll likely be the Conservatives that win. I don't think there's any saving the Liberal Party right now. Even if Carney comes in, speaks well, and he's.
You think your generation won't fall for this?
I don't think so.
I wonder if that's your group of friends, or you.
It could be. But I don't know. I think for most of Canada, they're done with the Liberal Party this round. Maybe they'll be back with Carney or someone in 4 years' time or 2 years' time, however.
My friends aren't like right wing, left wing, kind of like centrist, and they all want Pierre. They think Pierre is the best.
I just think the Liberal ship is sinking. It's going to be hard to save them for this election, at least.
Yeah, they've tarnished their name so badly in the past decade that I don't think they have any hope.
It'll be
the front runner.
It'll be interesting to see how hard they push.
I hope Hydra Badger's right in the comments. It's going to take us to Bitcoin. I hope it just all roads lead to Bitcoin.
Mm-hmm. Well, there's the accelerate theory, which is like the more they botch this whole thing up, the more they screw everybody, the more money they print, it's just going to accelerate us to a Bitcoin future. So then there's the accelerate guys that like this because they're like, good, keep messing it up. Like let things get even worse. It just takes us to Bitcoin at a faster pace. I don't know if I necessarily agree with that, but I think all roads do lead back to sound money. And if you're going to look at all the sound money options in the world and you do a deep dive, Bitcoin seems like the most viable and scalable for the digital world that we're in today.
It's the most perfect money I've ever studied.
Mm-hmm.
I can't see anything really deep, replacing it really quick.
Do you want to put up your slide?
Later. Let's go through. I like your slides. Let's go through your slides. We don't usually talk slides like this.
Yeah, Tether sees $10 billion in net profits for 2024.
Can you make a small, like the slide smaller, just so that? How does this work?
Yeah, so Tether,
there we go.
$10 billion net profits last year, which is insane. So for anyone that doesn't know, Tether is a stable coin. Stable coins are pegged to the US dollar, or try to stay pegged to the US dollar. So they're like digital dollars. So it's like you can send, one Tether or one USDT, a dollar's worth of value across the world without using traditional banks. And the way Tether works, I guess the way they make money, because I was confused. I'm like, how is this company? They have 100 employees, by the way. 100 employees, and they did $10 billion in net profit. That's more profit than JP Morgan and all those American big banks with over 100,000 employees. They did this with 100 employees. And I was looking into it because I was confused on how they're making all this money. It looks like when you're buying USDT, so the Tether stable coin, they're taking your money and buying US debt, which is like short-term bonds, so T-bills. And that's how they're trying to say that they're pegged 1-to-1 with the dollar. They're going to have the same amount of US dollars in circulation or in their reserve as they have USDT in circulation. And then those short-term T-bills give off interest. And with that interest, they go and a lot of the time smash buy Bitcoin. But because they have so much money in the T-bills, the interest is just so big on the number that they're just buying such huge quantities of the T-bills that the interest is
their most
huge.
Profitable company ever.
Yeah, the interest is huge.
The 16th biggest buyer.
Andy, can you make the slide smaller? Just because otherwise, I'm just trying to get a feel for how we're going to do this live. Like once we show the headline, can you just...
Anthony, you want to say they're the 16th biggest buyer of U.S. debt in the world?
That's the
I think
smallest
just remove it after. Otherwise, the screen looks kind of, to me, all chopped. I think we show it and then
Yeah, I
rip
think that
it.
looks good.
Yeah.
Sure.
Yeah, I think they buy more US debt or have more US debt than Germany, the UAE, and there was some other European country.
Yeah. So they're the 16th biggest buyer of US debt. And that's obviously way ahead of a bunch of different countries.
Which is nuts because it puts the US government and Tether in a weird position because the US government obviously loves Tether buying all those T-bills.
Yeah.
But at the same time, they don't like people using these stable coins and USDT because it takes away from people going through the traditional banking system.
Yeah.
So it's a weird
I
love-hate
wonder
relationship.
I wonder if we're just one senator or congressman or however you refer to these guys in the U.S. wrote something in the Wall Street Journal, like an op-ed, just basically saying how stable coins can save America. And so I wonder if they're just ready to let inflation rip and devalue the heck out of the dollar. Because I guess what they're saying is if you compare oil and the 1970s to what Tether and stable coins represent, when they made that agreement with Saudi Arabia in the 1970s to say, hey, denominate your oil in US dollars, that creates all demand from all around the world, who everybody needs some oil. You then automatically create US dollar demand because if you're going to buy some oil, you have to get some US dollars first. Then that kind of created this demand for the US dollar, stabilized it as the reserve currency. Saudi Arabia got all these US dollars, recycled it back into the system by buying treasuries, Aiden, to your point.
Yep.
So there was all this demand for treasuries and US could fund its debt because the Saudis were there buying treasuries. I'm summarizing greatly here. But now if you go to the same point where it's like, oh, maybe people aren't as interested, oil-based countries aren't interested in giving up their valuable commodity for debt that they know is going to be devalued. So it's kind of breaking away at the fringes, right? People are like Russia, Saudi Arabia, Russia's treasuries are frozen. Saudi Arabia is looking at the value of the treasuries over time, maybe going down. China doesn't want as many treasuries. So the US now needs another buyer for its debt. So now stable coins miraculously show up to the scene. And it's people from all around the world who have like pesos or lira or whatever other currency that they whatever currency they have. And they're like, I need US dollars. They don't know how to get it. They're not really banked, but they can go to Tether and exchange whatever amount of, currency in Argentina with Tether to get US dollars. Tether then takes that currency and buys the equivalent value of T-bills, like you're saying. And now there's this magical new demand that's not coming through oil, but just from people who have worse off currencies wanting US dollars, and it creates demand for debt again. So now they've they're realizing, holy shit, through stable coins, we might have found the solution to our lack of demand for debt. So I'm wondering if the US is just willing now to say, print US dollars at all costs. Who cares? It's going to save our debt market. The currency is going to inflate away. We don't care, but the system lives to fight another day.
And is that the demand comes for the stable coins just because of like the unbanked people that don't have access to?
American and I think for countries that are going to trade, like if I'm in, let's say, Vietnam and I'm going to sell alcohol to someone in Thailand, I'm just picking two random countries. Maybe I don't not going to write that contract in currencies of these two countries. I don't really trust each other's currency. I don't know the valuation. So I'm just going to choose the US dollar because it's relatively stable. And the contract that I'm going to make between your restaurants in Thailand and my alcohol in Vietnam, I'm going to write that contract in US dollars.
And I guess most goods are priced in US dollars.
Yeah. So it creates demand for US dollars to just settle this contract, even though these two countries have nothing to do with the US. But
Makes sense.
But then taking the currency and buying Tether with it is creating demand for US debt. Like, it's quite brilliant.
Yeah, it's
really
crazy. $10 billion net profit. I think
so Tether as a company is most profitable. I just mean it's brilliant for America.
For sure.
Now you're spreading more US dollars. You become even more of the standard. The value of the US dollars might fall. It might fall even faster, but you're still the standard, and your debt market keeps plodding along because there's this demand for the debt. Like, it's pretty fascinating.
Yeah, it'll be interesting to see how this plays out. That's crazy.
And then it paves the world for Bitcoin becoming the best form of capital in the world, digital property, pure money in the world. And you got this currency floating out there that nobody really wants, but everyone's decided is the standard, and people use it to write contracts in.
Mm-hmm. Yeah, I think it'll be like a little gateway drug for people to learn more about Bitcoin for actual wealth preservation, because the stable coin just looks stable relative to like their local currency. And like their local currency is going to depreciate against that stable coin over time. But then if you can just get over to Bitcoin, you understand that the US dollar stable coin is losing all its value relative to the Bitcoin.
I just wonder how, it's hard for a lot of people to get to Bitcoin, because how many people globally have pure savings?
Not many.
I know. And I think really to start understanding Bitcoin, you need savings, because if you're a family, even in Canada, who's just living month to month, basically, it's hard to really understand or even appreciate Bitcoin, because like, well, how much am I going to buy? Like mentally, that thought process, like, okay, well, I'm going to get like $50 or $100 a month. It's not going to change my life. Forget it.
Yeah. Taking that $100 to buy more food or have fun on the weekend, that's going to benefit your life more than putting that away.
So I feel like it's tough. It's almost like the system has deteriorated so much that like nobody has enough savings to be able to even push it into Bitcoin.
Mm-hmm.
Like it's rough out there.
Mm-hmm.
Yeah.
I don't know. Maybe I'm generalizing too much, but that's my concern.
Oh, I think it's a reality.
Because like when you first bought, like, do you remember when you first bought like your $50 worth or $100 or $500 worth of Bitcoin? Like, what did you really think? Like, what was the thought in your mind? I don't know if either of you remember. Was it just like, oh, this is going to be a trade? Like maybe I'll sell it one day and my $500 will be worth $600.
It's just better than saving in dollars.
You thought that way from the beginning?
Yeah, because I had read the Bitcoin Standard. I was learning about gold and silver. So I'd already
Okay.
started stacking silver and gold before I started buying Bitcoin. So for me, I was like, well, it just makes more sense to save in these precious, scarce metals or sound money versus other money. It's not like I was putting that much away, but it was like, well, at least I can tuck something away and it's inflation protected. But yeah, I didn't think I was going to get rich with my $200. That's for sure.
Yeah, at first I think I had no idea what I was buying at first, but I'm trying to put myself in perspective of like someone in I don't know, somewhere else in the world living on like $5 a day. And I'm like, yeah,
like US dollars is going to kind of do what I need it to do. Got to go and make a transaction.
Yeah. I don't know. It'll be interesting to see how this plays out. I don't know.
Yeah. Like it's a big leap to go from US dollars to Bitcoin. But if we can get there, if someone is living off the equivalent of $5 a day and they can use Bitcoin instead and save part of it, yeah, it's meaningful.
But
So
then if you're living off $5 a day, are you spending all that?
Yeah, exactly.
To live? Yeah. I don't know. It's going to be weird to see how this.
I guess the same principle applies. If you can save like 20% of that over time, then that will be meaningful to you, after a year or 2 years. So it comes down to just save whatever you can save. Save it in the best, hardest form of money. Be done with it.
Mm-hmm. I don't think those people are going to move the needle either with Bitcoin, because it's just, they don't have any of the wealth. Like they barely have anything. It's sad, but it's true.
But out of 7 billion people, yeah, I guess.
Yeah, but like there's
what a mess.
No point saving. Like take the money and spend it to benefit your life now. That's kind of, everyone's been driven to that mindset because their savings get stolen or debased or confiscated or literally cut in half overnight. It just happens all over the world, right? So what's the point? We're all incentivized to focus on today instead of tomorrow. There's no point saving.
And I guess debt is so readily available. Like you want a car, here's a lease. You want a house, all right, here's a mortgage. Like you're just thrown.
You're actually incentivized to take the debt to buy the car or the house now, because it's going to be more expensive next year, generally speaking.
And it starts early. Like, were there credit card companies on campus at Western?
Yeah, all the time.
The credit card companies. So like, because that's where it really started with me in university, was like these credit cards are just thrown at you as a student visa. And then I wasn't smart with them. So I just like threw a few $1,000s on them, like thinking this is great. Let's go to Mexico.
Mm-hmm.
Yeah.
And then, I'm stuck making minimum payments. And then all of a sudden I need OSAP. And before you know it, I'm early 20s and I got all this debt.
Yeah. Well, if money is debt, you're incentivized to get as much debt as possible if you can wisely manage that debt. That's real estate investing 101.
Mm-hmm. Yeah, except all the money, because it's debt, comes with interest. So I'm not just paying back the debt. I'm not paying back the money I borrowed. I'm paying back the money plus the interest. So in my life, it sucks. As real estate, at least there's an income stream that if I bought the property wisely, it's covering the debt payments for me.
Exactly.
But in life, when I take on the debt.
Yeah, there's good debt versus bad debt, but you're incentivized either way to get into debt because the cost of goods goes up. So it's like better to buy it today than tomorrow. That's the consumer debt. And then the cost of assets goes up. So it's better to buy the house, put 20% down, 5% down, 10% down, buy the house today instead of tomorrow. Because by the time you save up the down payment for the house, it's already out of reach. The goalpost is moved. So the whole incentive structure is to get into more debt. And if you look at some of the wealthiest people in the fiat system,
Just hearing this is pissing me off. Keep going.
It's terrible. But if you look at some of the wealthiest people in the fiat system, they're the ones in the most debt. You look at real estate investors that we work with, 5, 10, 20, 15 properties. And it's like they have millions of dollars in debt, but they know how to, manage it smartly, have income covering the interest payments on that debt. But that's the whole game. It's fiat mining.
Totally. Okay, I want to keep going down this rabbit hole too, but let's keep ripping through some of the headlines.
All right.
Anthony just fucking pissed me off. Trump orders federal workers back to the office 5 days a week. You pulled this one up?
Yeah, I just thought it was funny.
This is amazing. Like the government is paying for your salary, but you don't have to come. How many of those? I just would love to know how many government buildings are just flat out straight empty, and how you can rip it down now, Anthony. You know why I'm saying that? I just prefer it without the slide up there all the time. How many government buildings in the US, never mind Canada, in the US are just like empty or half empty? Think about it.
And just the amount of government workers probably doing nothing.
I had a friend who had to get rid of somebody, and they discovered they had one of those mouse movers because they were working from home, but they had like a physical one or something. Like it wasn't a software.
You buy them on Amazon.
Okay.
Yeah.
Why do you know that?
I've heard about it.
Where you can, they moved their mouse, and they discovered that the mouse was going in the same sequence, I guess, throughout an hour or whatever. Yeah. And they ultimately got rid of this person. But I was like, holy shit! Like, imagine the amount of government workers in the U.S.
Oh yeah,
who have just been doing that, milking it for years,
for sure.
But also the same people who are complaining about the cost of goods, the cost of housing, the cost of food, but they're part of the problem because they're taking a salary and contributing nothing to the economy. Mm-hmm. So if Trump is going to, I think that move alone, by telling people they have to go back to the office 5 days a week, is going to do more for saving money in the government than anything else. Because how many people are going to just quit?
Mm-hmm.
Wow. So that's effective immediately, I guess.
I think
we don't know.
I don't know.
It'd be great to get like some version of Doge up in Canada. Some government efficiency cutting mechanism where we can cut the waste and be more efficient with our government. It would be fantastic.
Yeah.
Has Pierre talked about that at all?
Not at all. I think he's trying to distance himself from the whole Trump movement because the left will just lump him in with Trump and say he's Canada's Trump. And that's the last thing he wants.
Trump did win though.
Yeah. Yeah. And I'm sure he supports Trump more than the other side, but he still doesn't want to be lumped in with like the MAGA crowd, right?
You know what's freaking me out is that you're seeing all these things get signed in the US, and it's making the distinction between the US and Canada even more obvious. Like when they freed that Bitcoiner who made the Silk Road website, Ross, what's his last name?
Ulbricht.
He's out.
When they freed him, and you're just like, okay, that was obviously the right thing to do. Like, congrats. That was like great government.
Totally. A guy, it was his first offense ever. And it was like nothing. He didn't do anything physically wrong himself. I know, that was crazy.
And I feel like they did the right thing. The president comes in, signs the presidential pardon. He's already been in jail for 10 years. You're done.
That was cool that Trump did that. Yeah. He called his mom.
And then who would we have up here to do the same thing? No one.
Can you do that? Can the government?
Well, let's just assume you could. Let's just assume you can. Who's the person in Canada that's going to do that? Who? What politician? Doug Ford?
No, you need like the first guy that comes to mind is like a Max Bernier. But
I don't know if he has what it takes to become the prime minister.
I don't think he will. No, he definitely doesn't have the support. But I think if any guy were to do it, he's the guy.
Okay, that's interesting. Maybe it's him. Yeah.
Okay, let's keep ripping.
All right, what's next, Anthony? Molinaro. Aiden, these are yours, right?
Canada's population could reach 80 million in 50 years despite immigration cut.
This one's Anthony's.
Huh.
So according to the projection scenarios, the Canadian population estimated at 40 million in 2024 would continue to grow in the coming decades to reach between 45.2 million low growth scenario and 80.8 million high growth scenario by 2074. According to the medium growth scenario, the Canadian population would reach 59.3 million in 2074.
Just a lot of random numbers thrown out in this article.
Yeah.
Yeah. I don't know.
Basically saying it's going to keep growing, and it's going to be largely from immigration is what the article went into.
I guess there's no, like, is this a normal percentage growth or not? Or it didn't say.
I would say the growth rate we're on right now, 80 is like definitely possible if we continue growing the way we are. It's just whether it's sustainable or politically feasible. I don't know about that.
Yeah, I don't know. No.
Why do we need all this population growth?
Well, GDP is made up of GDP is consumer spending, government spending, investment, and net exports. So that's how we figure out our GDP. And the reason that it's calculated that way is that you always want that GDP to be going up because we have a debt-based money. If GDP doesn't always go higher, then there's not enough money to be counted in the system to pay for all the debt that came into existence with interest. So you need the GDP to always be increasing. So the factors that influence those things the greatest are population growth, productivity, and capital growth or debt. So the three factors that influence the three things that make, or the four things that make up GDP are population growth, labor. So that's why these governments want to stuff in more people into these countries, because more people creates more demand for your stuff. More demand means more debt is being created as people seek out visa
Canadian
cards.
workforce is just shrinking, right?
I don't know about the Canadian workforce. I guess we have the same demographics as the US. I'd like to know that stat. Yeah, I assume it's
The American one is.
the labor force participation rate is going down in the US and has been going down since about the year 2000, I believe. So yeah, their labor force is going down. Then productivity, when you have labor force participation going down and population really isn't increasing that much in the US. And then you have productivity, which if the labor force was increasing and people had more money to spend and the productivity was increasing, well, then if you make more units of whatever you're making per unit of energy and there's demand there to buy it, well, that's great for GDP. But when productivity creates more things faster, but there's no demand to buy it, the productivity should be bringing prices down. But remember, the system that we live in can't allow prices to come down. Prices must always go up because GDP must go up, or there's not enough dollars in the system to pay for the debt. So we don't get the productivity gain. And the last factor then is capital, which is debt in our system. So the last factor between labor, productivity, and capital, aka debt, has to increase. The GDP requires that much more debt comes into the system because we're not getting the growth through the other factors that influence GDP.
So they need these new people to just continue spending.
They want new people in the country and want new people to take on debt and to continue to spend to create demand for all these things that we're trying to produce.
Because I guess if they're going to increase or put even more debt in the system, that might kill the system tomorrow. So they're already maxing the debt side of the equation out, I feel like.
Yeah.
I know it could get worse.
Yeah. And I guess the idea is like how much.
So then population growth is kind of another way to stimulate the GDP number.
Correct.
Yeah.
Put in more people gets more mortgages, more Visa cards, more car loans, more debt is created, GDP goes up. Okay, the system lives to fight another day. But if you have labor force drop really drastically and productivity is making everything cheaper, your last factor is just debt growth. Print money, stuff it into the system, devalue everyone's purchasing power. But at least we have enough dollars in the system to make all our debt payments so the banks don't fail.
Yeah.
That's basically the summary.
Makes sense.
Does it?
Yeah, it does. It's
insane.
It's like quantitative easing with people.
Yeah.
It's like,
so the question then becomes like, why as the health of a country are we measuring things from GDP point of view? Think about it. Why for the health of Canada are we measuring GDP? If GDP is made up of consumer spending, government spending, investment, there's some investment component in net exports. The exports kind of sort of make sense to me. Is the country making stuff that other countries want? Okay, that kind of makes sense. The investment component makes sense. Are you putting money back into some investments in the country? But the two big main factors are consumer spending and government spending. Why are we measuring spending to indicate to us that the GDP is good?
Yeah, it's the wrong way to look at things, but we all know why.
I know
There's
the
Keynesian economics. And in Keynesian economics, it's government should control the money supply.
Yeah.
And the way that they view the economy or see the economy, growing or doing well is just the amount people are spending.
Yeah.
Which is a broken way to look at things.
Yeah. I'd like to propose a new thing.
But that's the Keynesian economics that are taught in like universities,
Yeah.
what they were teaching me at school.
Yeah.
And it's kind of taught all across the world.
Yeah, exactly. I'd like to propose a new thing. People's purchasing power, $1,000. We keep it steady, $1,000. And how much rent and how much groceries can $1,000 buy for every Canadian in the country? And we measure that. And if the number goes up, that's good, because then you can buy more groceries and afford more rent
for sure.
$1,000. If the number
that's
goes
the way to
down,
look at things.
It's bad.
mhm.
But we don't look at people's purchasing power. Instead, we look at this nonsensical GDP number, whereas I'm sure if there's some economists listening to this right now, they're going to go, this guy, Tom, is completely insane. He clearly doesn't understand economics. And my rebuttal to that is no, I clearly understand economics, and your economics is fucking bullshit.
Totally.
It
Yeah.
should be
Some of my
people's
favorite
purchasing power.
My favorite fights on Twitter is when there's a Keynesian economic professor or something going at someone, Austrian economic, I don't know, like
Yeah.
safe going at someone. Those
Yeah.
are the best threads.
Yeah, because the Keynesian economist will say that money just exists to pay off debt. They'll say things like this: money is an asset, but it only exists to extinguish debt. That's what they'll say. And I know why they're saying it that way, because that money, that representation of money that we're calling dollars right now, only exists because debt came into the world. It's like a debt receipt. So by giving it back to pay off the debt, you're extinguishing debt. So they're thinking money only exists to extinguish debt. Like that's the only thing money is here for. It's an asset you have in your pocket, but you can use it to extinguish debt. It's really valuable. But the whole thing is completely backwards. It's like, it's been so bastardized that nobody understands what money is. And once you understand what real money is, your whole worldview changes. I don't know why I'm getting pissed.
Yeah, no.
Fucking the whole thing is pissing me off.
What's
next?
This isn't going to help.
Worse?
Trudeau promises very strong response as Trump renews tariff threat against Canada. So basically, I think him and most of the premiers are talking about retaliatory tariffs, and basically going, as hard Trump goes on us, we would go just as hard on our goods to them. And that's their response.
Can you pull a slide down?
Yeah.
So I think that I wish someone could fact check this for us, or if we knew, but I swear some liberal government officials said that they were going to retaliate by turning off some of the pipelines to the US for our energy pipelines coming out of Alberta.
I think I saw that on Twitter. Yeah.
Okay, I have no idea if this is true, but I swear I read that the pipelines that come to Ontario and Quebec go through the US.
Yeah.
So if we turn the pipelines, this must be wrong, because there's no way a government official would say this without checking this.
Well,
but if you turn off the pipelines to the US, then Ontario and Quebec don't.
I don't know about that one.
I wish I knew more about that. I honestly, I want it to be true, because I want it to be another point that proves how crazy our government is. So I really hope that that's actually true, because it's insane. But what is true to good? Did you guys hear the clip of the guy? I can't even listen to him, but did you hear when he said last night or something that somebody said, well, what would business owners think about investing in Canada? And he's like, well, we've already dealt with Trump once, and we are very stable here in Canada compared to the US. Or he said some kind of weird nonsensical answer. And I thought, I don't know. I'm an entrepreneur. I'm a business owner. The last place I feel like investing more money right now would be Canada. Don't even know what the capital gains tax is. CRA is saying they're going to enforce a higher capital gains tax, but apparently the budget item never really got approved in Parliament. So CRA is now taking it upon themselves to initiate this action of a higher capital gains, like the whole thing. So as a business owner, when you look at this landscape, the last place you want to invest is where there's no certainty. So why would anybody want to come to Canada right now? And then we have a government that's like gone missing at a time when a US government's coming in, our biggest trade partner, saying that they're going to put tariffs on us. Wow. Yeah.
Crazy.
It's just a mess. And the guys,
Disaster. Here's a chart, average asking rent for all property types in Canada. And it's basically showing, like, from December 2020, the average rents for all property types was $1,708. And it went up all the way to a high of $2,178 in December 2023, 3 years later. And now it's actually come down a bit and softened to $2,109. So we went from $1,708 to $2,178 down to $2,109. And you see the headlines, people talking about rent softening. I'm seeing it as well, a little bit, like fill-in properties on the streets. And it's true. Like, I think rents have softened in some areas.
Okay. So on what you're seeing, because I want to talk about this data, but you're filling mostly single family homes, no?
Single family homes, yeah, and like apartments in single family homes.
Okay, and then what are you seeing on the rent side?
So some rents have gone up a little bit. So two houses I'm actually refilling.
You can take the slide down.
That I filled from last year, and I'm not trying to push the price because I'm just not getting demand. Actually, one of them I think I'm gonna have to lower the price a little bit. The other one I am seeing demand. And I just filled another one, and I thought it was really reasonably priced, and rents did come up from the past couple of years. I think the landlord had a tenant. So it's obviously local, depends, supply, demand, all these different local communities. But I'd say from those COVID highs, or even into 2023, like, it has softened a little bit. It's not like every time you refill a property, you can push it up by $50, $100. It's just softened a bit. But all you see are the headlines saying rents have come down, rents are crashing. But if you just zoom out, you can see, okay, rents actually are still way up from just 3-4 years ago. So it's just looking at the bigger picture, I think.
Mm-hmm. And that was interesting data that you put up there because you said all property types. I wonder how much data they really have on single family home rentals, because CMHC for the longest time, and I think this is still the case, was just pulling apartment rentals and advertising that their rent data and vacancy data, but really behind the scenes it's apartments.
Yeah.
It's not like all rents. So I think it's hard to capture like all the single family home stuff.
Well, if you look at this chart, this is single family homes as share of total dwellings under construction in Toronto, but it's a similar chart if you zoom out and look at Ontario, which is single family homes aren't being built nearly to the same pace that they were before. And then we have another chart here showing purpose-built rental completions.
Yeah, wow.
Skyrocketing.
Mm-hmm. Makes sense. Wow. Yeah, that's big.
So the single family homes are getting more and more rare for sure, and more desirable of a rental unit for people.
Can you go back to the rent data that you had up there? Yeah, there. So rent data, all property types based on whatever they're getting all their info. So we don't know what percentage of the property types are condos, apartments, single family home, whatever it is, but it's back to, what are we like? Wait, it's only back to like September or like summer 2023.
Mm-hmm. So from December 2020, it did the math because I wrote an email about this. It's up 24%.
Got it.
So if you see any headlines about rents falling, it's like, sure, from a year ago.
There was another chart though that broke it down into different dynamics and some of the newer properties, because what drags that down is some of the older properties. So if you look at some of the newer properties, they're up 20% over like the last 2 years.
Makes sense.
Do you have that there? That other chart?
don't.
Yeah, because that one breaks it down
Okay.
even more. So you see so a lot of the older properties, their rents will fall more and they don't have the same growth, because especially with if you're looking at purpose-built apartments, they're just not as desirable. Right. So that when, it's just tough. And that's right across Canada, that thing. So, but I mean, overall, the trend is, yeah, like anything, when things jump, like Anthony's saying, when things jump by a bunch, it's normal that it levels off. If I was looking at the property price numbers, the purchase price, the average sale price of properties. And if you look at long-term trends, you look at M2 growth, we overshot it on the, we overshot when after 2020, like 20 to up to 2022. And now we're kind of coming
Back in line.
We're kind of coming back in line. Like it's no different than what happened in like the late 80s, early 90s. It kind of, we've been trending sideways a bit.
The price chart?
Yeah. And it's like, it seems to be, it might be shaping up to do the same thing again, where it's like trending sideways until like it's kind of back on trend.
Yeah.
Maybe it trends sideways for longer and the money growth kind of outstrips it a bit before asset prices go again. But maybe it doesn't. But I mean,
yeah.
I'd like to know actually what condo rents in Toronto, like what they're going for now, like the peak of what they were and then what they're back to now. I'm not sure, but I'd like to see what that is, because I think that sector is what is driving probably a lot of those headlines.
It is, because that's what people are focused. The rental market in Toronto is the condo market, primarily, right? But yeah, 100%. We have that data.
Yeah.
We can find it.
Yeah, this is a chart of the Niagara residential average price. I don't have it on the screen, unfortunately. But to your point, it's like there's a huge blow off top in the beginning of 2022, and then now it's just back to that same long-term trend line.
Mm-hmm.
Like it's just adjusting, right?
Yeah.
Interesting. I don't know if we've ever looked at what rents go up year over year. Like, I guess you need a consistent data source. Yeah, kind of a little
hard to
harder,
get
a little
the data,
harder.
right?
Yeah.
And it's a rent controlled environment, so tough. So you have to exclude. You would have to like, do you do just new? I guess it is just new rentals, because you're not talking about renewals. But there's just so many different products, and it's tough.
On that point about rent controlled, this chart of purpose-built rental completions, do you think it basically spiked up since 2018 because of the removal of rent control regulations for new buildings built after 2018? Because as soon as like that regulation comes in, you can see it skyrockets.
I don't think so.
Is that not the
No,
cause
because
of it?
any new building had no rent control. There's no rent. You're just going to market rent. If you have a new building, you're just advertising for rent at market rate. Do you know what I mean?
Yeah, but new construction was exempted from rent control. You're saying like when they changed the rules, so they were exempted from.
So if somebody leaves the property on the second, got it.
I'm saying just year to year. If the tenant doesn't leave, the rent controls that's the year 2018. If your unit was built after 2018, if I build an apartment building in 2022, I can raise rent.
The only thing, the reason I think that might not be the case is because prior to that, the date was actually earlier. So there was that,
wasn't it like
that exemption? I forget, but that exemption existed
for
for a long time but it existed at an earlier date. Then, God,
Something changed.
Which government? No, one government came in and said, okay, no, that no longer applies. I guess it was a liberal government before the conservative one. All the properties now have the rent control applies.
Maybe.
Then conservatives came in. They said, okay, no longer does all the rent control apply to everything. It only applies to ones after this date. And I don't think so. What I think started happening. So I think it impacted it for sure because it helped make the numbers make more sense. But
Yeah, it looks like.
but the numbers changed when interest rates got very low and rent started jumping. The return on that type of investment changed, and I think it made it more attractive for institutional money. And what happened is, especially when yields got squeezed down, more institutional money went into that space, and they were interested in it, and a lot more money, even like government incentives and stuff.
That would make sense
to push more money into that space. No different than what we saw with like the MLI Select program when that existed. How many people, when it existed in its old form, how much more money was going into these purpose-built rentals and stuff, and people were qualifying. That's one of the things that was pushing that as well, right? And now you're seeing the easy money, not easy, but CMHC programs are easier for people to fund for larger rental projects as well. So you're seeing more money go into that space, which generally kind of, wherever, like whenever they pump easy money into an area, I think that drives it more than other things.
Mm-hmm. Speaking of easy money, this is a chart of the rate cut path that we've been on, and then what an aggressive forecast would look like. This is all Ben Rabideau's data, the most recent charts.
I think the next Bank of Canada announcement's later this month in January. Nick, earlier we were just looking at the Canadian inflation number that came in for December. I think it was 1.8, and we were laughing because it looked like it came down a little just because there was no tax on.
That's what they were saying.
Yeah,
I know.
And now that's just coming back.
So even a cautious forecast, at least according to Ben's opinion, would be 2.75 as early as April 2025. And a more aggressive forecast would have us down to 2% by July 2025. That's wild to just go this low again.
So this is what? So we are currently sitting at the Bank of Canada's rate right now is what, 3? Is that what that is?
I think right now we're 3.25.
3.25 or 3. So bank prime, I wonder what bank prime is. But basically, so variable rates have the potential to come down, we think, another full % this year. That's basically what that chart's kind of.
So what, Ben's predicting a quarter point in this month, at the end of the month?
Looks like it, yeah.
Is that what you two think's going to happen?
I think January 29th, we get a quarter point. I can't see them doing another half point. Another quarter point. Next policy change, another quarter point. I think 4 or 5 quarter point moves this year, comes down a %. It doesn't even seem like that much. I think it's just going to take more to really spur on the real estate market. We'll see. I don't know.
What do you think with Trump weakening the dollar, and then if Canada keeps cutting here, is it going to be actually not as bad for the Canadian dollar? Will it spike a little bit against the American dollar? What do you think is going to play out?
I think the American dollar is going to just be debased really quick, hard and fast over the next 6 months. And so the Canadian dollar relative to the American dollar might look better over the next 6 months. And it'll allow Canada to cut rates, and the Canadian dollar exchange rate to the American dollar won't look as bad because the Americans are aggressively cutting their dollar. So I think there's just like a bit of gamemanship here that allows Canada to cut some rates, and the Canadian dollar might just sort of stay around where it is right now. So I think that's going to happen. So I don't know. You can see as we look around the table, a lot of confused faces on this one. I don't know. I just see confusion because I don't know how long the Canadian consumer needs to heal from all these payments over the last year and a half. Like everyone we speak to has drained their liquid family spending money, their liquid new investment money. Very few people have a lot of excess liquid.
Totally.
money.
It's not an instant shift where it's like rates are lower, I'm good.
Yeah. So it's almost like an injury happen to the liquidity, and now you're cutting rates to heal the injury, but the injury takes time to heal. So is it going to be like 6 months or a year later this year? Like, I don't know.
Where things get really interesting is you're starting to see some costs, some labor and material costs come down for new construction. So this is where things get interesting all of a sudden, because if the costs are coming down for new construction, does supply come on the market that is cheaper than people anticipated? Right? Because there's some developments that haven't taken place, and the land could have been purchased either at a decent price or it was purchased a while ago. So there's margin there. So it's not a new purchase where they're purchasing at a higher price, or it's a new purchase and land prices have come down as well. And if you're starting to see construction costs come down, Well,
the numbers start to look good for those builders.
Well, yeah. Are they able to now build and offer it at a lower price
Yeah.
that people are willing to absorb a little more easily?
And they're still making money on those projects.
And then what does that do to the resale market too?
Yeah.
Right. This is where things get interesting, because how much deflation are they willing to let go into the system? Because if these input costs do actually come down.
Yeah, I didn't think about it like that.
I don't think they can sustain it for any period of time, but that changes the dynamic far more at this point than I think interest rate cuts.
Yeah,
This
yeah,
goes
yeah.
back to our point that GDP must increase. So if those costs are coming down, it's not good for GDP. I just looked at CIBC's bank prime rate today is 5.45. So even if you get a discount of a full percentage, you're at 4.45. So if they drop rates another full point over the next 6 months, you could be at a variable rate by June, let's say, of maybe kind of sort of 3.45.
Yeah, and we know
I guess that would spur 3.45 would spur some activity.
I don't know. We know. I mean, it's winter, so it's hard to tell. But we know people that have recently locked in an existing mortgage at 3.94. Right? They've been locking in, and I don't know how much. So we're like if 3.45 will spur it, sure. I mean, just like what are we right now? Like 4.1. You can probably get, pretty a number of options at just over 4% on a mortgage. And that spurred it more than 7.5% that it was at.
Mm-hmm.
Wasn't Dan saying in our team meeting, like you can get pretty good rates right now just through renewing through your bank? That's like, they're not publicly advertised kind of rates.
Yeah.
Yeah. Like in the
no, he was saying that, but he was also saying what they were shocked by was that if you had a variable rate and you called the bank and you said, hey, I want to lock into a fixed rate, that the fixed rate the bank was offering you today is way better than they're offering new people on fixed rates. That's what he was shocked by. So if you had a variable rate and you called the bank and you're like, hey, lock me in, the fixed rate that they were offering was like incredible. That's what he was shocked by at this week's. That's what he was saying was a big deal. And then Hydro Badger in the comments, thanks for this. I feel like Hydro Badger is helping us out here with the research. It was 1998 for that change on the stuff. That sounds about right.
Yeah,
I remember. I remember early 2000s.
It was a long
late
time.
1990s.
Yeah, it was a long time ago now.
Yeah.
So see, that was before your time, Anthony.
I was 3.
You youngin.
Holy shit.
Well, it was before we were doing this as well, but I'm just saying at that point, like when that existed.
Yeah.
I forget when the Liberals changed it, but that's, that was probably, Conservatives been in power for what now? For 5 or 6 years. Liberals for maybe 10 years ago or something, they changed it. 8 to 12 years, something like that.
Before we wrap too, I wanted to ask you guys, how is California going to rebuild what's been burnt? Because I'm like, demand wise, if there's demand for labor is going to be pricey. How are they going to be able to afford to rebuild a lot of what's gone?
Don't worry, man. Gavin Newsom, he's on the case. They're covered. He's going to throw some fancy dinners, and it's all going to be taken care of magically.
I think capital always finds a home too. So like there's going to be some developers that swoop in there that do have access to capital, that see opportunities. Some people are going to not want to rebuild and sell. So developer buys, sits on it for a few years. It'll happen. People will see. It's just such prime location right next to the ocean there that it will happen. And I think some people are just going to bail out of that area and say, listen, I'm not building. A developer comes in, sits on a few lots.
Yeah. It was crazy to see some of those videos. There was like the people were recording when their house was the only one left standing on the street.
It's weird.
The way they built it.
Yeah. Crazy. I think the more involved the government is, or the more restrictions they put on place and not allow the free market to take hold, the shittier the process will be.
And that's probably what's going to happen in California.
It'll either, yeah. So I don't know. So there's going to be some people, because there's some areas, very wealthy areas, there's no impact. It's like, whatever. It's not going to be a problem. But I think they're going to screw it up. It'll be interesting to see. Look, it's just reality.
I agree with you.
I can't look at anything over the last decade that the government has got more involved in and think that it's really gotten better. Maybe there's aspects that have kind of perked up a little bit, but there's been big.
I don't know. I don't even know if there's any aspects.
Well, I'm sure there's
I don't know.
Well, I mean, I'm sure the only thing that came to mind was I'm like, maybe I'm wrong here, and I don't have the inner workings of it, so I could be wrong. Is the subsidized daycare in Ontario? I don't know if it's across Canada or whatever. So I'm like, oh, maybe that's worked out.
I guess I would just question why we need to subsidize daycare, but sure.
Yeah. Okay. But that's like another conversation.
No. Agreed. I just mean,
I wonder, if Trump and the U.S. will be able to see a little bit more of a free market and less government intervention, just across the economy, but Probably not. I don't know. Time will tell.
There's just
So bloated.
There's so many moving parts, so many competing interests,
Yeah.
so much slush money flowing around. Like it is crazy,
Yeah.
man. Just look at Canada. What's happened with us? Like the things that have come out with the amount of money that's been going around here. It's crazy. Just insane.
Yeah. I mean, maybe this time though, some Bitcoin and crypto industries won't be getting unbanked. Maybe that'll be a difference there.
What's next, Anthony?
You want to put up some of your slides here?
I just had two. The reason I wanted to share this is I just found myself in awkward conversations with people in finance over the last little while that clearly have no understanding of what good money is. So when you talk to people about money, you can't even have a full discussion because they don't know what money is. And I think this goes back to what you were talking about Bitcoin earlier, Nate, and what you were talking about earlier around Bitcoin is that people can't evaluate Bitcoin because they don't have the context or the framework to evaluate it. So you could have the best form of money staring you in the face, but when you don't have the criteria from which to analyze whether something is good or bad, you can't make a decision on Bitcoin other than to say it produces no yield, therefore it must be crap. And I think once people understand that characteristics of money are some of these things on the screen here, then you can start evaluating. And the ones I circled at the top are the biggest ones. Like fiat has the limited quantity or scarcity of it is very low because it can be printed. That's why we talk about M2 all the time. Whereas something finite, whatever it is, gold is better, Bitcoin's the best. Something finite can't be printed. You want that as long as it has those other characteristics of money, because then something else, some people will come to me will say, well, Tom, great. I can find something that's more scarce than Bitcoin. So that's the best money.
Read out some of those characteristics for anyone listening.
If you're listening, we'll read them up. Can you put them back up, Anthony? It's limited quantity or scarcity, decentralized, how decentralized it is. So fiat is not.
We're talking about Bitcoin here.
No, I'm just reading the characteristics of money. So decentralized, the dollar isn't decentralized. It's a central bank. It's literally phrased central bank controls fiat. Then it's how portable it is, how secure it is or verifiable, how divisible, how durable. So how long it'll last, the durability of it. Interchangeable, fungible, and medium of exchange. And I guess in this list, the durable is also referring to the store of value of it. Limited quantity or scarcity, and medium of exchange. And then it just goes through talking about fiat and grading it gold and grading Bitcoin. And I think when you look at it with this context, then you can make a more accurate decision of like where you want to save your money. And I feel like this is the point where most people don't really understand it. Like they don't have this criteria, so they can't make a decision. So I find myself having to like ask people like, when you talk about money and Bitcoin's not good money, what are the criteria you're using to define money? And then nobody has criteria. I just feel like it's a lost era since basically I was born till present day. Nobody knows what money is. Therefore, when they see the best money ever, they can't conclude that for themselves because they don't even know what money is.
Well, I think people first come to Bitcoin too. They're thinking of it as an investment. So then when you talk about money off the bat like that, they're just already confused and don't know where to start.
Yeah, exactly. And I think that's a symptom of the situation. Exactly
Totally.
What you said, that everyone's looking at as an investment instead of just a place where you can have your savings. I think that summarizes.
Sometimes I wonder too, like if there was just more of a free market worldwide, like just free trade across the globe, I feel like it's probably a bit of a disaster just because everyone has to use their own currencies, conversion rates for which currency, and they're using where it's going. I'm like, yeah, if you did have one global money, like what would free trade across the world look like? And I don't know, but
yeah, I agreed. You wouldn't know, but I guess it could be nice to know that a unit of labor might be paid at the same rate. Didn't matter where you were, what continent you were, whether it was Asia, North America, South America, or Africa, or Europe, that a unit of labor was paid and honored.
I guess it's just easier to make economic decisions.
Bitcoin doesn't do that.
Bitcoin has a better chance of doing that because if I can print the currency in a small country to infinity, I can print people give people whatever I want as labor, and then debase it like 10 times.
Yeah, but if the costs are different in different places,
sure,
just pay less for labor. Like it doesn't. That's
exactly. But the unit of labor could be kept constant, and then if the
could be, but I think that's it. Well, you're talking unit of labor, but it's not. it's not worth the same amount of dollars, of Bitcoin, of whatever the global currency.
Correct. But we now have two variables to correct for. The unit of labor is not the same around the world for different reasons. And the currency is not the same around the world. So you get double manipulated misinformation.
No, I'm just going back to Aiden's point. It doesn't fix anything, because in China, if they're paying someone 5 Bitcoins, sats an hour, whatever you want to do, and Canada is 20 to it just doesn't work.
Well, no,
they're subsidizing. No, because if the government starts subsidizing energy and things like that, because they're able to do that within their own country, because if they're extracting their resources, they're able to deploy those resources how they see fit. And if that gives them a competitive edge internationally because they're reducing input costs for manufacturing, then it changes the equation.
I agree with that part of what you're saying. But the other part is, in your answer, do they have their own currency as well? Because if they're paying those people in their own currency, they can manipulate whatever they want. I'm just saying, can we remove one of the variables that gives misinformation globally around the world? And one of the variables is the unit of account, which we are paying people in.
I'm going back to his
totally. Yeah, I see what you're saying for sure.
I'm not disagreeing with you. I'm just going back directly to that point, right? That's the challenge with it. But this Hydra Badger is great, because this is like we have like instant.
I know, I should have mentioned.
Anthony's got a computer. Anthony's got a computer in front of him. You could be looking up this stuff too, Anthony. You know what I mean? But anyways, Hydra Badger thing. So the rents were changed back by Kathleen Wynne. Remember her? She did a great number on this province. She destroyed it pretty good. In April 2017, and then it was April 28, and then in 2018, Ford put them back and without a new date.
There are 20 people live watching right now, so if anyone does have a question, drop it before we wrap up here.
And then Anthony, this came up in the podcast that I was in. This is the paragraph that changed everything for me. This is a paragraph this is on page 34 of Saifedean's book, The Bitcoin Standard. And this paragraph just like literally slapped me across the face when I read it. It says, this is a historical lesson of immense significance and should be kept in mind by anyone who thinks his refusal of Bitcoin means he doesn't have to deal with it. And what they're referring to in that sentence is India and China stayed on the silver standard much longer than Great Britain. And the United Kingdom went to the gold standard like 150 years earlier. And he's concluding in the pages before in this book that the reason that the UK was able to garner such great power is they went to the better money earlier.
And I think the example of that is it's in the Bitcoin Standard, I believe. It's when in Africa they were using beads, I think, as their money. And then from Europe, was it gold that they had that they brought to Africa and were able to take a lot of Africa because their money was worth.
So some of those beads, what some Europeans figured out is they figured out how to make those beads faster and cheaper. So they would go back to Europe,
right. That's what it was,
and come back to Africa with new money.
Yeah.
And they were able to debase the beads. Yeah, but the second,
it's like what I'm doing in my basement right now.
The second sentence is the best though. History shows it is not possible to insulate yourself from the consequences of others holding money that is harder than yours. That's what freaked me out, because at the time I was still kind of dismissing Bitcoin a little bit, like, I don't really care about it. It's stupid. Forget it. And then I read that sentence and I was like, holy shit, I can choose to ignore it, but I can't choose to ignore the consequences of ignoring it. That just rocked my world, man. I don't know. I'm a geek with that shit. I rocked my world. Anyway, anything else? I think that's the other thing we have to discuss is Richard Diaz is coming to the Next Year Life Year Terms event. He is one of the co-hosts of the Looney Hour and does a great job of economic data. And he's a Habs fan. So I've communicated to him that this is like a flaw in our verification of any speakers at our events. So next time there's a Habs fan, one of us has to catch it, because he got through all the checks. And then we discovered he's a Habs fan.
You know, if the playoffs started today, I think it was today or yesterday when I looked at the standings, the Leafs would play the Habs.
Yeah. The Habs have been on a tear. I guess I don't know what happened after they played the Leafs. They got destroyed there, 7 unanswered goals.
Couldn't do anything.
They were on a tear
until then. 3-0, and Lanier put up his hands and started celebrating early in the first period. Did you see Did you see that goal when he?
Yeah.
When he started celebrating, like, did you see the goal?
No, I didn't watch it.
He celebrated, put his hands up, started looking around like he won the Stanley Cup, and then boom, 7-0.
I was watching football. Football this time of year, football takes precedence over hockey.
I think we were flipping back and forth.
Yeah.
I thought the game was done, but anyway, we have to be on high alert. Any guests for the podcast, anyone that works here at Rockstar or anything, we have to be screening for Habs fans.
Calgary Flames fan.
Ben Perrins, Calgary Flames, that's kind of allowed. We're on high alert for Habs fans. We have to be on high alert for Habs fans.
Is your mic off?
I think,
yeah. I think it just
did it unplug?
Maybe. Yeah.
We kicked you
Yeah, out of nowhere.
Nice. Yeah.
All right. We'll wrap. Anything
I
else?
think so. No, I think
Yeah.
that's it.
All right. Have a good one.
See you guys.